Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today, the last day of the year, Wednesday, December 31, 2014. Happy New Year to everybody. It's been a really good and profitable year in 2014 for all the subscribers and everybody that's been paying attention to the videos, and we're going to have even a better year going into 2015. So now let's get into the market. You're looking at a daily chart of the SPY, and you know, this is why I say sometimes it's a humbling business, because the other day I said I thought the market would reach 2100 in the S&P to finish out the year, which would have been up in this area, right here, for the SPY, but that didn't happen, and that's why this is a humbling business. We can't be right every time, but nevertheless, after this up move we saw from the middle of December up to here, where I said we were going to rally up into the end of the year, well, so we really did rally up into the end of the year, minus the last couple of days, and that's why we weren't exposed to the market. The subscribers were not exposed to the market on the long or short side, other than a trade alert that was issued yesterday and one or two open positions if they still chose to have them open after an up move here, but that's it. So we didn't take any risk after all this up move. I wasn't short, wasn't long. You don't know what's going to happen with the last couple of days of the year. It's kind of an anything goes scenario. Well, what happened was we sold off the last day of the year right into the 20 period moving average here. And so here's what we have moving forward. That's what's important. What's important is we're going to have most likely a light volume day on Friday, because I would imagine that most traders, investors, mutual fund managers, hedge fund managers, and the like are probably going to take a long 4-day weekend. The market could go up, it could go down, but it should be light volume on Friday. And I'm not going to try and anticipate exactly what's going to happen Friday. That's more of a fool's game. We're going to let it happen, let it play out the way it's going to play out. And if the market does continue down into the first week of January, what I'll be able to do is I'll be able to calculate where the normal stopping points of the market may be and where the bounce level would be for the next rally. And that's what's important, and that's what's going to allow us to make some money right in the beginning of January. So have no fear. I'm here. The market, remember I always say this, the market is designed to trick everybody. Okay? It doesn't trick me a lot, but it tricks most people most of the time. And that's what happened the last day of the year. I don't think anybody anticipated the S&P, for example, being down 20 points the last day of the year. But nevertheless, it happened. And so what? No big deal. I'm not even going to tell you I think the market's going to do X, Y, or Z on Friday, because who knows? It doesn't matter. Just stay away from it. Don't guess. That's a gambler's game. We don't want to be on the side of the blackjack table with the other 4 players throwing their money away, right? So what do we have? We had tax loss selling at the end of the year today. We had some profit taking. Was it meaningful to me what happened today? No, it's not meaningful. I don't really care. I just care that I'm able to calculate for the members, for the subscribers, for you guys. I'm able to calculate what the next major move is. Well, I don't know exactly what the next major move is going to be until we get into January and we see how the market reacts into January, and we go from there. And that's the way we're going to play it. So let's go on to the next thing. So over the last couple of days, I've been watching, and I told you about a pattern. Let's look at Seadrill, SD. Oh, I'm on the wrong screen. Sorry about that, guys. SDRL. RL. Okay. So we looked at Seadrill. Here's a daily chart at Seadrill. And I told you that this pattern was a very attractive pattern for me because I like the fact that it was what I would call a bullish pattern set to move higher on Seadrill. Well, what was interesting today, on a day today when the market was down and a lot of stocks were down, okay, whether it be the energy sector or otherwise, down day. What happened in Seadrill? Well, Seadrill wasn't down. I'm going on another screen here. I just want to get you some data. Okay, so Seadrill I think it finished up a penny today on the market. Let's see. Seadrill was up 1 cent in the aftermarket. It's down 3 cents. That's nonsense. That's meaningless. But what's interesting is on a day when the market was down, the S&P was down 20 points and the Dow was down 160, what happened with Seadrill? It was up a penny. That tells me good news, right? That tells me that there are buyers underneath Seadrill. So it tells me, it doesn't necessarily tell me we're right yet, but it certainly tells me we're on the right track with Seadrill. So let's just look at an intraday chart, and we're going to just stay on this topic so everybody understands. Okay, so Seadrill was down early in the morning, and it creeped back up the rest of the day. Yesterday, Seadrill was up, down in the morning, crept back up. What does that tell you? Very simple. It tells you there's a bid underneath Seadrill. There are buyers underneath Seadrill. What that tells me is somebody, and I don't mean one person, but somebody institutionally or multiple mutual funds or hedge funds or whatever they may be, they're supporting Seadrill down here, okay? We look at a 60-minute chart, which is an hourly chart. Okay, you see this long consolidation down here. They're supporting Seadrill. There's a bid underneath Seadrill. Back to the daily chart, okay? We had this up move. As long as we stay above 1118 on a daily chart close, okay, Seadrill is okay shape. It's in okay shape. So that's just an update on Seadrill. We're watching that one, whether you took the trade or not. I just want to make sure that we continue on this topic because since I told you about it, I kind of gave it out as a free trade, if you will. So I want to make sure that we stay and talk about it because it was a educational moment, a learnable moment for a pattern that I like to see, and I want to see it play out one way or the other. Whether we're right or wrong, we're going to stay on it until it plays out one way or the other, okay? So far, it's not that we're right, but so far we're not wrong. On a down day in the market, Seadrill finishes up a penny. That's positive. There's a bid underneath Seadrill. We'll see what happens in the first week of January. I'm not expecting much on Friday, but we'll see what happens in the first week of January, and we'll take it from there. Crude oil, we'll go to USO. Okay, crude oil right now in the aftermarket session. Now I'm looking at the March contract right now on the crude oil contract, and we're up a little bit. It's at 54.17, but crude was down today, and during the day today, crude hit 52.47, I think it was. Anyway, the bottom line was, on that, and that's on the March contract, the bottom line is that I told you that my line in the sand was 53.60, and if we broke that level, we're probably going to see $50, and my mathematical number is $48, and I think we're going to see $48 at some point in time. Now, we'll see what happens, but in my book, it's still very weak, and I understand that it bounced at the end of the day, and if we look at a intraday chart, you see this rip up here at about 2:30 in the afternoon, 2:20. That's what tells you there's a bid underneath crude oil, but it doesn't tell you much. It still tells me that crude is weak. I'm not going to read too much into the intraday action when I see, we're back to the daily chart on the USO. When I see this is just still melting away, and it just, to me, it wants to go to $50, not USO, but crude oil wants to go to $50, and you know what? That's fine. We don't have a position in crude oil. We have a position in an energy stock right now, and that's okay, and it's still above what the stop-out level would be, and I'm expecting a bounce, and we'll see what happens in the first week of January. I don't know when 50 would occur in crude oil, but I can tell you, I think we're going to see 50. I think we're still going to see 48, but I can't tell you when, but we'll see what happens when we get into January. A lot's going to develop in January. We're going to see a market pivot in January. That's going to give me a good roadmap for the rest of the year, and in the first week or two in January is going to tell me where I'm going to be able to tell you what the market's going to do and when it's going to happen. So that's important, and we'll wait for that to happen. Again, always let the market tell us what to do. Let the charts tell us the story. We don't impose our will on the market. Let's go over to gold. Okay. Now, GLD, Yesterday we had a nice up day. Today we had a nice down day. So it's just whipping around, and I always tell you gold's going to be volatile, but I think I know we're in the seasonally strong period for gold. So I am expecting an up move into 2015, but we can certainly move lower before that happens. However, low, higher low, higher low, higher low. So we're still above that now, and I'm not reading into anything that happened at all today, and I'm not going to read anything into that happened yesterday or Friday, because it's the end of the year and it's just a bunch of tax loss selling, squaring of positions, window dressing, all that kind of stuff. So it's all nonsense. I don't really care what happens right now. I do care what happens into the first week and two of January. That's going to tell us a lot. But I just want to, make sure that we're all aware of what's going on. We stay fresh on the markets. We stay alert, and we look for things that can give us signs of positive information. So the last thing I want to discuss is as we get into earnings season for the next quarter. Okay, so when December ends and we start to get into earnings season between January and February and that kind of thing for the fourth quarter earnings, what you're going to hear when you hear companies miss earnings, okay, the excuse is going to be the strong dollar. So let's just take a look at UUP, which is the ETF proxy for the dollar. All right, this is the daily chart. So you see this big up move. That's going to have a negative impact on global companies' earnings that have to convert other currencies back to the dollar. What that means is, let's say a company sells products in Europe. So they collect euros for what they sell when they sell their products in euros. Okay, and then if they're bringing that money back to the U.S., they have to convert it into dollars to bring it back to the U.S. Well, if they have not hedged against the strong dollar, which means that they took a hedge position, which means they essentially either shorted the euro or had a long bet on the dollar, which is an FX trade, okay, in the currency market, for hedging their own money bringing back into the U.S. If they didn't do that, then the money that they collected in Europe, for example, and converted back to dollars into their own coffers for their own profitability will be worth less to them than it was before. And the reason I want to make mention of that, it's very similar to, it was like maybe 3 or maybe even 4 quarters ago. It was last winter. What happened was there was a very, very severe winter in a period of time where a lot of stores were closed and a lot of companies weren't selling anything as a result of the bad weather. And when earnings came out the next quarter, they blamed it on the weather. And it's really nonsense, because if you're going to buy something, okay, and you can't buy it on Tuesday because there's a snowstorm, you're still going to buy it on Friday or next Monday. So the same thing goes to the dollar. I mean, well, it's not really exactly the same thing, but my point is that it's an excuse, not the reason. If they have poor earnings, they're going to blame it on the dollar. Whether they really sold less or not, we don't know. But nevertheless, I just want to make you aware of what the talking heads are going to start to say. It's going to be an excuse for poor earnings, not necessarily the reason, although it could be. But most global companies are smart enough to understand that they have to hedge currencies when currencies are moving against them. But it will become the excuse, and just something to be aware of. It's a little end of the year tidbit for you. And speaking of end of the year, let's end the year right now. Happy New Year to everybody. I'm David Frost. Let's look forward to a very, very profitable and positive 2015. This was the last Common Sense Market Analysis video of 2014. Talk to you guys again on Friday. Again, I'm David Frost. Thanks for being members, subscribers, and viewers of these videos. Have a very safe and prosperous New Year.